Welcome, everyone, to another episode of the YouTube show and podcast, None of Our Businesses. With me this week is Jack DiMatteo.
Hello, everyone.
And AJ Wheeler.
How we doing?
I'm Ty Carr, and this week we're going to be talking about some things in the news. Cruises. Alaska is joining Florida to get it going, and Ty reveals his Alaska cruise experience and the famous person he cruised with. McDonald's ice cream machines are always broke. Could this be intentional? Are we going to see a deluge of employees switching jobs in the near future? And finally, Ty, that's me, I'll give you some business tax updates. Well, hey everyone, before we jump in, I just want to say, put your comments in there, ask us questions, tell us things that you might like us to talk about, and always subscribe, give us a thumbs up. Tell your friends about us. We'd love to grow this community as we continue talking about these issues, as always, from an accountant's perspective. Actually, many accountants' perspectives. All right, well, let's get this thing rolling with Jack.
Okay. Well, I got an article here talking about cruises. We're desperately trying to get cruise lines back in operation, and this one looks like it has a heck of a shot because I believe these are probably cruises that are going to be within the United States. So Alaska's decided to join Florida and soliciting to be able to start doing cruises again. I mean, we're a little bit over a year into this. I know I've talked to some people who've talked about, well, airlines are flying at full capacity, but yeah, they're full planes that they used to have 10 flights a day. Now maybe they have 2 or 3. So there's no way they're flying at the capacity they were. But unfortunately for cruise lines, as it's seen as recreational, they haven't gotten the go-ahead yet. And Alaska, which I've heard is one of the most beautiful cruises you can take, they're joining the battle with Florida to start getting cruise lines going. Now, I think in the short term we could probably do that, but I think the cruises that are probably still going to be on hold quite a while are the ones, especially the ones going into Europe, where a lot of things in Europe are. I just saw Boris Johnson talking about, he wasn't going to shut down the UK. No how, no way, but their infections are going up. So, tough go for the cruise lines. But what was your take on the article?
Well, I have done the Alaska cruise, and it was beautiful. And it's, but it's kind of like an old folks cruise. It's, we went with my wife's parents, and it's, it doesn't have to be an old folks cruise. I mean, you can do kind of more excursions and things, but they've had several accidents with the planes. They do the planes that go, what do they call them? The fjords, or those big kind of cliff sides. I think the same cruise whole operation that we went on, shortly thereafter, there was a plane crash. I was like, wow, I'm glad we didn't choose that particular excursion. I'm just rambling off on some totally sidestepping the question, rambling off on interesting facts about my Alaska cruise here, because the other interesting fact about it is on my Alaska cruise was none other than Newt Gingrich. And so this was years ago, but not too far ago, but maybe 6 years ago. And I at first I thought, no, it's just it's like a Newt Gingrich impersonator or something. But then after he walked by, my wife and I are sitting in the hot tub in the cruise, and after he walks by, I see his wife coming down, and I'd seen his wife on like news articles or on television clips or whatever, and so I was like, no, this is really Newt Gingrich. And I finally worked up, maybe toward the end of the cruise, like a week later. It wasn't a full week, maybe a few days later, I finally worked up the courage to actually ask him in the hallway, "Are you actually Newt Gingrich?" And he was a very amenable kind of guy. He was like, "Yep, in fact, yes, I am."
And then Ty got tackled by Secret Service.
Yeah. No, it was weird because there was no security. There was no, he didn't have an entourage. I think he even when we went to the part of the Alaska cruise stops at like the Victoria Island, the Butchert Gardens, which are really famous and beautiful there. And so you take these, the regular folks, you all get into these tour buses and you go to the gardens. We didn't see Newt before this, but when we were at the garden walking around, there were several different groups of people, and we could see Newt Gingrich across the way, with the tour group walking around. So we knew he was at the garden. We come out of the garden to go back to the cruise, and there's our tour buses lined up, and there's this like stretch limo there, right? So, we're thinking, of course, that's what, that's there for Newt Gingrich, but it wasn't. Like, sure enough, I'm like getting into the bus and I look over and Newt's getting into the other bus with the rest of the group. Like, yeah. So, that part was quite surprising how much access, and during the cruise and stuff, there would always he'd sit down for a meal or something. And then inevitably some folks would come up and sit down with him and tell him how much of a fan they were and how much they liked him. Good thing for him. I think most of the folks on that cruise were his kind of people. It could go the other way, I suppose, but
it was an Alaska cruise, so the age group probably, was
right.
up in his demographic area,
Right. Yeah, exactly. So anyway, that's what I have to say about cruises. Done them, enjoyed them. Don't feel like doing them right now during the pandemic. Sorry, cruise lines, or anywhere. I probably wouldn't do them for a long time. I don't know if I'll ever do them again after all this, but I'm sure that lots of folks will. There's some really compelling things about the whole cruise experience that, in terms of the price versus what they give you, that I think is going to draw lots of people in. So which is why it's a regulatory issue, because without some kind of regulatory oversight of it, I think the price versus the value that they provide will draw people in, even in the heat of a pandemic. I think that would happen. So that's my 2 cents on it.
Yeah, I kind of feel the same way, Ty. I'd be hard pressed to get into an airplane or a large boat. I feel like they're both like sealed tin cans of, or a sealed like petri dish, essentially, of everybody else that's in there with you. So it's kind of a hard sell, I guess, for me. But the industry itself, I think, was really besieged. It's been besieged for the last however long this has been going on, year and a half or whatever it is. And so I guess this is another light at the end of the tunnel kind of thing, right? They're kind of opening it up, seeing how it goes. And, hopefully everybody's getting their vaccinations and, staying safe on those places. But I think it's, if you're in that industry or you work in that industry, I think it's, probably a light at the end of the tunnel. Or if you are one of those industry leaders, having some kind of revenue come through the front door is probably just absolutely needed at this point. And, to go on for so long, the travel, restaurant industry, airline industry is, slowly coming back. But all of those industries, I think, were hit so hard during this time frame that seeing any of it open up, I think, is a refreshing sight. And hopefully it continues to go that way,
Yeah, it's just, you're right. This one's just, crippled. And it's interesting because I think if you look at the uneven recovery or with COVID, it seems like, or at least the news that we get, it seems like the United States is emerging or coming out of this. Maybe the worst is behind us, and Europe, I think, is back into their third or fourth dip, and I know India is going through real hard times. So if at least they could get some domestic cruises going to at least get some revenue in the door and keep people employed, that would be a heck of a start. AJ, do you have something else for us this week?
Yeah, absolutely. So mine's a little bit of a different one. I saw this video on Reddit pop up, and it's a YouTube video. It's about a half hour long, but it's from Johnny Harris, who does a really good job. It's kind of like a mini documentary, but the name of it is The Real Reason McDonald's Ice Cream Machines Are Always Broken. So this has been in the news. There was that guy that made that app that kind of he kind of back hacked, the API of McDonald's and found out which locations had broken machines. And what came of that was a staggering number, almost like a 30% failure rate of ice cream machines that were up and running at all McDonald's around the country. And so Fox News and Vox and all the, Slate and Ars Technica did all these kind of research articles on the reason why these machines are broken. And the conclusion that they all came up with was it was the cleaning cycle. So this is a special machine that's made by a company called Taylor for McDonald's. And it requires a 4-hour cleaning cycle to happen overnight. And so the conclusion that they came up with going through the normal PR channels was that if you went to a McDonald's and the machine was down, it's more than likely it was under this 4-hour cleaning cycle that it was. But this guy digs a little deeper and finds out that it's actually a little more nefarious than that. And what happens is when you're a franchisee of a McDonald's, you're given a menu of items that you can buy, not just food, but the actual like machines that go into your restaurant. So you have an option of like 2 different fryers for French fries, or you have an option for 2 different grills for your hamburgers. For ice cream machines, you have one choice, and the one choice is from a company called Taylor. And now they make ice cream machines for Wendy's and Burger King. They have many other industry partners that they make ice cream machines for, but none of the other partners have this kind of failure rate on their machines. So long story short, what happens is 25% of Taylor's revenues, this was in a slide deck for investors that were thinking about buying the company. It was uncovered that 25% of their revenue is actually reoccurring service that happens through servicing these machines. And the machine itself is actually engineered to be obtuse about what's going on and what errors it's shooting out, and causes these kind of failures. And essentially all roads lead to calling a service person. So you have a situation where the overnight crew switches on the cleaning cycle and the hopper was too full. So the ice cream concoction doesn't get hot enough to do this cleaning cycle, and in the morning they come in and it says it's a failure. So the guy in the morning just pushes again to try and do it, and it fails again. And so now you have irate people and they're calling the franchisee person, what do we do? Call the repair guy. And so these repair bills are, upwards of, I don't know, $1,000 sometimes per visit for them to come in and look at it. It's kind of like a plumber. If they show up, you got a couple $100 bills that you got to slide over to them. But essentially then another company outside of McDonald's called Kitch put together a device that would actually hack your ice cream machine and give you real-time results on what was causing the error codes that were in here. And this was actually kind of widely distributed as a solution to the machines breaking at a McDonald's franchisee convention. And not too far after that, McDonald's released a statement saying that if you use this Kitch product, you voided your warranty and it could cause irreparable damage to your machine. And then they proceeded with Taylor, one of their oldest partners, to roll out a very similar type of solution, but it still had kind of gatekeeping the inner workings of the machine and only gave you kind of a superficial walled garden, for instance, kind of view of your machine. So essentially McDonald's and Taylor are kind of gatekeeping this service revenue that they want to keep going. And they have kind of built in this reoccurring revenue that everybody likes to see in business on the backs of franchise owners, kind of walling it off like this. So I'd kind of like to get your guys' opinion on it, like if this is surprising to you, or if you think, that maybe this Kitch device that was, installed is, it does kind of break manufacturer warranty, or if you think this is just kind of an egregious practice that probably should have the cover pulled off of it. I'd love to get your guys' take on it.
Well, I mean, it at best, McDonald's corporate, you think about this story and it's like McDonald's corporate is just not caring enough about their franchisees. They're being ambivalent to it, but it sounds worse than that, right? It sounds like McDonald's corporate has some skin in the game or something, because they're actively supporting their counterparty in this contract, and rather than the interest of their franchisees. So it feels like there's something else there that is not quite known in terms of the relationship between McDonald's corporate and Taylor. But that's what it brings to mind for me. So I'll throw that in the pile of conspiracy theories for today.
Why are we so pre-programmed? We all want to believe the worst about McDonald's, but this one's kind of interesting for me because at one point in time I did work for a McDonald's distributor, and it's really amazing from the vendors to the distributors to the restaurant owners. I mean, they'd keep everybody in line, and you're right. You're told what to do. This one to me is, and they've always I guess, kind of been associated with excellence. I mean, we were pitching movies early on, and the name of the movie actually escapes me, but Michael Keaton was in it and was talking about the origin of McDonald's. If you have a chance, go ahead and watch that one. It's fascinating because it was two brothers who ran just an outstanding restaurant, and he could see the genius in what they were doing was, franchising it, repeating this great process all over the country. He could see what they couldn't see. But for such a high standards they like to set, it's got to be awful frustrating to be a restaurant owner, have a machine that breaks down every 5 minutes. I mean, let's face it, who doesn't? Everybody jokes about McDonald's machine being broke whenever you go in there to get some kind of ice cream. So it's got to be frustrating for them. But I mean, to your point, that's how McDonald's controls things. You've got one choice. That's the machine you have to get. If you don't like it, tough. And they control their franchisees and they keep them in line like that. But there just seems to be a whole lot more to this story. I mean, this uncovers something, but there seems to be still something left out that they're not really telling us.
Well, the thing that really got me about this story was it flies in the face of how I think about customer service or like, a service business, like you think of McDonald's, or a fast or food business like that, right? You want to satisfy the customer. And in this case, the customer wants ice cream, but can seemingly never get it, on a regular basis. And it seems like the answer is there, but they're keeping it obtuse for service revenues. So I just thought it was interesting and thought it was something we should talk about. But Jack, you got another article for us?
I sure do. I guess I'm going to stick with the post-COVID theme. I'm watching too much Bloomberg news. It seems every morning they're talking about what's going to happen. It's like the post-apocalypse. It's going to be post-COVID. So now the story goes, I guess after COVID, everybody's going to be looking to switch their employment. People are frustrated and they feel boxed in. And after COVID, they're all going to switch jobs. But it's really funny, regardless of what's going on in the economy and the world. You'll always seem to see these polls that tell you how many frustrated people are going to switch and leave and go to different jobs. And, it almost would seem you have a lot of people complaining that they can't find top talent. If they're that frustrated, it would sound like they could probably go get a job now. I mean, what's going to be magical about when COVID is over? If you're not fulfilled or you don't like your job now, I mean, do something about it now would kind of be my thought. But I think you can always, regardless of times, you're going to see these kind of surveys about people that are, complaining about jobs. It's like, we've all sat next to that coworker who comes in and complains about their job every day. But, if you send out a resume, well, no, I haven't done that. They don't do anything about it. So it just seems like you have a lot of this grumbling. To me, it just seems like a whole lot of noise. I don't think, after these restrictions are lifted, that there might be a mass exodus. What I could see is people who've grown accustomed to working remotely and want to continue that. If they're working for a corporation that's not going to allow that can continue, I could see them, making moves for that regard. That might drive some of this impetus. But I've also seen on the other hand, a lot of companies are embracing it and telling people, we don't ever want to see you back in the office. Here's an allowance. Go ahead and outfit your home office for comfort and things of that nature. So kind of wonder what if you guys think Armageddon comes with the job hoppers when COVID ends.
I think yeah, there is something to it. I'm seeing it from a different angle. I'll make a shameless plug that we're looking for people to join our team and at TCA and one of the profiles that works well for us is people who have been in public accounting who want to maybe do a different kind of consulting, because we're still client service, but we're not the same as public accounting. And so there's my shameless plug. As you're interested in that, look us up on LinkedIn, contact us. But what I'm seeing with that is, like, this time of year, normally I would expect that there would be all kinds of folks in public accounting coming out of the woodwork that are interested in talking. And I'm not finding that immediately. We put our feelers out, and within our community and our network, I'm not getting a ton of people in public accounting wanting to talk. And so I'm curious about that point. I think it might be exactly this issue but from a different angle, that they're actually sitting tight, waiting for the come back to office point in time, which might be like 2 months from now. And then that's when they're going to make their move or make their run. So, because for public accounting, classically, those folks are looking like at the end of tax season or at the end of audit season, which is exactly where we're at. Now, tax season's been extended to May 17th, so maybe they're deferring their look as well. But I think any of them that are looking ahead, that are like wanting to make their move right after tax season, they would normally be looking right now, even though they might be planning to stay through May 17th. And certainly same thing with auditors. I'd expect that they'd be looking now. So yeah, I'm chalking some of that up to the fact that I don't see, and also aside from whether we're personally hiring at TCA or not, I've got a pretty wide network of CPAs and accountants in the Portland metro area. And typically I hear from colleagues saying, I'm looking, or I'm getting ready to leave, or my CPA firm colleagues saying, we're losing a bunch of people or whatever, right? And I'm not hearing any of that. So yeah, I've had this feeling related to what the article that you were discussing, Jack. I have this feeling that they're all just like sitting on waiting for what happens when they come back to office, and then they're going to make their move.
One part of the article that I didn't find too, I guess, like groundbreaking or anything was the dissatisfaction with leadership during the pandemic. And I don't mean that to say that I think leaders have done a bad job in the pandemic. I'm talking about the percentage of respondents were Gen Z workers, and they said that they were dissatisfied with their companies asking too much of them during a difficult period, with business leaders, on the other hand, found to be thriving, in quotes. Now, I don't really find that maybe as so much of I think of myself at that same point in my life, like 10, 15 years ago, I would have probably had the same feelings toward that if you're on the lower end of the employment scale, where you're kind of starting out or maybe like a few years into your career journey, that may be feeling that way. So I think maybe some of the some of the respondents or some of the percentages that they're talking about in this article may be related to age, and as you get further along in your career, you realize maybe that the grass isn't always greener on the other side, and it's like, I might as well stay where I am. The devil I know is, better than the one I don't. So, I think maybe age plays into this a bit. Youth is always exuberant and everything is always better on the other side. And in the job economy of my generation, not so much my dad's generation, but my generation, that's the way you moved up, is to move companies, right? Like if you were at a point in your career where you felt like you wanted to make a jump and it wasn't available at your company, you could very easily make a move to a different company in the same industry and probably be hired at that next level by demonstrating the skills that you had learned along the way. So, the olden days of staying at the same job for 40 years and getting a gold watch and a pension are gone. And I think you're seeing that play out in that generation, Gen Z, whatever the ones, millennials after that, kind of moving up in their career path by switching, whoever they're working for and moving up that way. So I think some of this may be just normal turnover and advancement by moving. And some of it may be related to the pandemic, where I think we've all felt this, like we've been working at home and we've been working almost, it feels like 24/7 for the last year and a half, where you kind of have to set those boundaries. And it's hard to draw those boundaries when your commute to the office is walking down the hall, because you can always go back to work very easily by walking down the hall instead of having to physically drive to somewhere. So I don't know. That's just my 2 cents on it, I think. And I think maybe a different spin on what the article was talking about.
Yeah, it's interesting. We were having this conversation earlier. They were talking about big corporate America last year, how like all the, ordering out for lunch or pizza parties or things of that were a thing of the past. But, being, I guess, a little bit older, I would look, it's like, well, yeah, you can have a pizza party or keep your job. Kind of an easy choice, when people were watching expenses. But, AJ, you were talking about enthusiasm and with the younger people. And I'll never forget a story a guy told me once, when probably 30 years ago. And he said, watch the time clock at one of these places. He said, you'll have all the young kids, running and they're fighting and they're getting in line and they can't wait to punch out. And they're long gone. And here come the older guys shuffling along, 5, 10 minutes later. And, because whatever the heck it is you think that's on that other side, it'll still be there. And I kind of think that that's one of the things too, like when you mentioned the younger people, being over sample, I guess, in that you would get a response like that, because I really think a lot of the people that I talk to, when they talk about a work-life balance, they're really in a position to really employ that work-life balance. If maybe they don't want to work 40 hours a week anymore, or maybe they're not willing to make a 50-mile commute every day. They're more of in a position to do that. It's easier to say those things, but when you have a mortgage, 3 kids, a car payment, that kind of limits your choices as far as what you can do as far as lifestyle and the employment you choose. But as you get a little bit older and you have a few more options, I think you can kind of employ the tactics that make you most comfortable. AJ, do you have something else for us this week?
I don't, but Ty has some exciting tax updates for us.
That's right. Yes. So yeah, I got a few business tax updates to throw out there for you guys and for our audience. The first one is about S corporations. There was a recent tax court case in TC Memo 2021-32. The taxpayer is Ward, and this was the case. The taxpayer was a lawyer, and they were the sole owner and officer of an S corporation. And I wanted to kind of discuss this case, or at least bring it to everyone's attention, because I think the tax conclusion is fairly obvious, but it's a situation where bad facts can make bad law. And this is one of those cases where the lawyer's situation was so ridiculous and egregious, really, in terms of having bad accounting and leading to bad facts, that it then leads the court to come to a decision that, if interpreted too broadly, could make you feel that S corporations are more restrictive than I think they're intended to be. So let me tell you the details on this. Was that the lawyer did not file any wages. I think the lawyer was a female, so I'm going to call it her. She wasn't filing any wages for herself. So as an S corporation owner, typically S corporations have to pay their owners who work in the business a wage. And if they don't, then the reason they have to pay themselves a wage is because the work that they're doing in the business, the cash flow that is paid to them for that work, is subject to the same kind of payroll taxes that other employees would be subject to. And so this is a common, well-known S corporation issue, that owner operators cannot just work in their S corporation and not pay themselves a W-2 wage. Well, now there is a legitimate kind of tax concept, planning, strategy, kind of compliance question here, which is, if you are the single owner of an S corporation and that S corporation has employees and it's deploying capital, is it true that all the free cash flow that goes to you as an owner should be a wage? And I would argue no. That, obviously as an owner of a business, there is some amount of investment return. So reasonably, there's some amount that could be, if you're working in the business, it could be paid as a wage, and some amount that would be an investment return to you, right? So that investment return would often be paid you in the form of what we think of as corporate distributions, S corporation distributions. So the problem in this, so what we normally advise, what tax advisors normally would advise their S corporation clients is, look, pay yourself a reasonable wage for the work that you do in the S corporation, and any profit above and beyond that wage that you're paying yourself is not a wage, and therefore you won't be subject to the payroll taxes that go along with it. That's the common belief system, the common planning that is done with this. But what this lawyer did was took all of the profits that she was taking from the S corporation and she took them as cash. So she got the cash for those profits. She didn't report it as wages through the payroll system. Now, she had other employees, I believe, and so there was payroll, but she didn't put herself through the payroll. So she didn't report all the cash that she was taking through the payroll system. But then on her S corporation tax return, on her corporate income tax return, the cash that she took, she reported as officer salaries. So, and this is kind of what I'm getting at in terms of that accounting treatment, to have taken that cash out as a distribution. First off, not paying yourself any wage would be against common tax advice, right? So there's a tax issue there, right? But there is a universe, there is a foreseeable scenario where maybe the cash that you received as an owner is an investment return. Maybe you didn't actually do any work for the S corporation, right? I mean, hypothetically speaking, there is a universe for that possibility. But if it's being accounted for correctly, it's not officer compensation. It's a distribution from equity. That's how the accounting works. That's how the line items on the tax return would work. So not only did this person not consider kind of the actual what the tax treatment should be, but in coming to a position, right, you can have an arguable position. This is a owner's distribution versus wages. She wanted to take the position that it was a distribution. We can argue whether that's right or wrong, but she wanted to take that position, but then reported it on her tax return as officer wages, as officer compensation, right? And so, of course, the IRS gets the tax return and they're like, you've got officer compensation on this tax return, but you have nothing going through your payroll tax filings for it. And so immediately they slap her with penalties and say, well, you apparently knew it was compensation because you put it that way on your S corporation tax return, but you didn't actually do all the payroll filings and the withholding that you should have done. So we're going to slap you with penalties for not doing your payroll properly, right? So, and then after the fact, they tried to, she of course tried to argue that, oh, well, this was really supposed to be distributions, but that position was arguable to begin with. And it's terrible to try to make an argument when you didn't even do the accounting to support your own argument, right? So this is what I mean by terrible facts, terrible accounting, really like tanking a potential argument that you might have. And so, yeah, I guess that would be my point and advice to all out there. A lot of times you think you've got this covered, you think you know how to do these filings on your own, but this is obviously a case of somebody who didn't get appropriate professional advice in taking her tax positions and filing appropriate tax returns.
Real quick, I think it's a highlight, right? I think it's a highlight not to rely on TurboTax if you're a lawyer and an S-corp owner to do your taxes for you, because it would have walked you right through this probably and ended up in this kind of situation. I don't mean to rail on TurboTax, but
yeah, you can imagine. Yeah, that's a good point. It's like whether it's TurboTax or some other software for self-prepared people doing their own S-corp, you can imagine that question popping up in the dialogue box, right? Did you pay yourself any money? Oh, by chance I did. Oh, okay. We're going to throw that in owner's compensation,
Well, and I think also too to note, I think the tax, I think you're really shooting yourself in the foot too if you're not paying yourself a wage that is then deducted from the net income of the business, that then you take the distribution that would be taxed differently. Right. She really did herself a disservice by not engaging a proper tax professional to look at this.
Right. And I think it would be precarious. I don't think we should take from this tax court case that an S corporation owner, all the cash that goes to them is automatically wages. Although a superficial reading of this case might suggest that because of the bad facts that were involved. But I would say the position as you just laid it out, AJ, the actual tax position we'd want to take wasn't laid out properly for the court. So I don't think it was tested here, right? So don't overinterpret this case because a more rigorous position wasn't actually laid out for the court to decide on here.
And I think my takeaway from it, sorry, Jack, but my takeaway from it is to have, I think if you're in the position of that S-corp sole ownership, I think is because of this ruling, I think it puts more onus on having good records, good facts, and having a plan with your tax preparer or somebody to show, in fact, this is the wage a reasonable wage that I paid myself. And separate from that is the distribution that I took from the profits of the business at the end of the year. Yeah. And having those two be distinct and separate from each other and have the records reflect that, I think is really important now. Because I don't think, I think this case lays it out where you can't just, thumb in the wind. I paid myself, like 50 grand and the rest of it's owner distribution. I think you have to have your facts, your ducks in a row,
100%. Really yeah. Yeah.
No, that's what I got out of it. I mean, you set up that structure, and the obvious one is, and that's the the advice lawyers have been, or accountants have been given forever, is basically pay yourself a reasonable wage, or as close to probably what the earnings are for the business. If you've got such a successful business that's going over and above that, that's when they start getting creative with the deferred compensation. And it's all about a tax plan. It sounds like this is a person that got no advice or very poor advice, and probably should have got something up front, because usually these things are structured. If you have the problem of making too much money, they have people that help you alleviate that problem or find creative way. I should say I shouldn't say creative, but there are ways to better manage that. And you're just sitting there getting to the end of the year going, wow, it's all employee compensation. Man, you're asking for trouble.
Yeah. Yeah. So here's another one, another tax update that I don't know if you guys heard, but there's new tax law. Under current tax law, you can deduct 100% of the meals that are meal expense incurred if it qualifies as a business deduction, if that meal is with a restaurant. And so part of the idea here was to help encourage businesses to go back out and patronage restaurants. And so that's what kind of was behind the thought, I think, in enacting this. So for those of us who do regularly do meals with our network contacts or clients or whatever, that's a cool deal. That's great, right? But what came out from the IRS guidance a couple weeks ago, or in the last couple of weeks, is pointing out that what is considered a restaurant. So and by the way, for those of you are not initiated in the tax rules here about meals, is that historically meals were only 50% deductible, right? So that was the deal, is that if you had a legitimate meal that would be deductible for business purposes, like you were doing a sales meeting with somebody and you and that person were doing that over a meal and it was legitimately a business deduction, there was the tax law said, yeah, but because it's a meal, we're only going to let you deduct 50% of it. So you always had to take a 50% haircut. So this 100% deductible thing is in contrast to that, right? That's why I was mentioning it's kind of a cool deal, because it's a deal we haven't had, right? We've always been subject to this 50% haircut. But in any case, this 100% benefit is only attributable if you're getting the meal from a restaurant. So that left this open an interpretation question of, well, what qualifies as a restaurant, right? If you're, and so really there's very specific things in the guidance. So I'd encourage other people to Google that or look it up if that's an issue that you want to look at. But what it boils down to is, like, groceries are not considered getting a meal from a restaurant. So if you were to buy groceries and then bring it into, maybe you have a company kitchen, or maybe bring it into your house and then have a guest over that is, maybe you are doing business with that guest. Legitimately, it is business. You're having a meal, but it's not at a restaurant. You don't get the 100% deduction on that, because getting something that's prepackaged or getting things from a restaurant, or getting things from the grocery store to make a meal does not qualify for this 100% deduction.
I have questions about this one, actually. So my mind starts racing, right? For those on the East Coast with Hellmann's instead of Best Foods mayonnaise, Publix, and the Wegmans and all the other ones, Whole Foods or whatever, we all know when we go into a grocery store that there's the grocery section, and then there's kind of like the pizza, sandwich, hot wing section that really effectively acts as a restaurant, you know what I mean, and is prepared food. And the reason why I get on this is food stamps, for instance, will not pay for like your meal prepared by the restaurant portion of a Publix or a Whole Foods or whatever. If you go and get a sandwich, that's not deductible by your Wix or food stamps or whatever. So I'm wondering if the same applies to this tax code, or if they got into that. Like if you get a prepared meal, like if you went and bought a pizza from like Whole Foods, do you need to go to Domino's instead of Whole Foods to buy that pizza? And if they're making that distinction, I guess.
I think what was clear to me is that you could not buy a prepared pizza at Whole Foods and take it home and then eat it there with your guest and do that. Now, if there's I also know, some of these places have like cafes within them, right? So could you actually order something within the cafe that's in the grocery store and then sit down in the cafe, eat that with your guest, and that would be a meal? I would hope so, but I didn't see an example like that in the guidance. So I'd say, I don't know. I didn't, I don't know for sure.
That's exactly where my mind went, AJ, because I know we've got chains here. There's a Heinen's, there's a Giant Eagle, and they all have that prepared food section. And that's the first thing. And some of them don't have seating, but some of them actually do. So I'm just looking at it as if you were to take a lunch or do a sales meeting and, hey, let's meet up at Heinen's, and you had some prepared food and you sat down a little cafe, I would take the 100%. I would think I could defend it. So I guess I would look at it this way. Boy, this is going to be a hell of a thing to actually scrutinize. But I guess if you're worried about it and somebody would come back and push back on you, I mean, you'd have to have a good explanation to be able to explain it. I would think that situation would be defensible. I would think the situation where, like Ty was saying, you went in there and you stocked up on some things and you brought it back to the company and, it was community pop or whatever the case may be, and you tried to pull the same stunt and you actually got audited, I think you'd have some explaining to do, and I don't think you'd be successful. So I kind of think I guess it's what's your threshold, and I would think if you've got a defensible position, you're going to be okay. But again, man, how are they going to enforce compliance on this one?
Well, I took it a step further, right? Instead of going to Publix or Wegmans or any of these other ones, you just opt for Ruth's Chris. I mean, that's the standard business meal, right? You go to Ruth's Chris for a steak and call it good. Make sure it's a restaurant and a good one, and then you get 100% deduction on it.
Yeah, that's 100% right. And I was just looking at the language on here, and actually, I think this goes a step further that I wouldn't even contemplated. So what they're aiming for is the term restaurant, they say, means a business that prepares and sells food or beverage to retail customers for immediate consumption, regardless of where the food or beverages are consumed on the business premises. So, and so I think, even if you bought something prepackaged and then sat down in that place's cafe, it would not, if it wasn't intended for it wasn't prepared for immediate consumption, then I don't think it qualifies under that standard. On the flip, and then they specifically did cite in their guidance grocery stores, specialty food stores, liquor stores, drug stores, convenience stores, and newsstands as places that vending machines are all examples of things that would not qualify for meals entertainment. Jack's laughing at the vending machine idea. Yeah, you take your client to the vending machine.
You can't deduct that Zag nut you bought.
Right, yeah.
Frozen burritos for everybody,
Yeah, but I think where they're going with it too is that like it's like if the location that you're going to get the meal primarily sells prepackaged, it like taints the whole location. Like I'm not even sure in this example if in fact you went to Whole Foods and they had a chef and they actually sat there and prepared the meal for you. I'm not even sure that would qualify, because they might say, well, primarily Whole Foods doesn't sell that. That's not what Whole Foods does. So yeah, it's an interesting dynamic. I don't know exactly how some of those fringe cases will or would be settled. We'll see if they ever come out. Well, somebody's deducting a high volume of meals at convenience locations, and then it goes to tax court because the IRS denies it. That would be quite the case for us to review.
Stay tuned. We'll cover it for sure.
Right.
They may be putting a hammer down, because I think that 100% might, even post-COVID, here we go again with the post-COVID theme, might stay permanent, and that's probably why they want to have that in place. That's because the whole idea behind it is to spur the restaurant industry. I think that might even been part of one of these stimulus packages, as far as how do they stimulate the restaurant industry, and obviously this is one. I mean, you're more apt to go out to a meal that's 100% deductible. So to AJ's earlier point, just go to a restaurant. Remove all doubt. Just go to a restaurant. I mean, there's plenty of other places to eat. You don't have to go to a Giant Eagle and try to argue about it later.
Yeah. Finally, kind of talk about something from a fairly nerdy standpoint, but the cannabis industry has been waiting for a for a conclusion on the Harborside case, which was originally decided by the tax court in 2018 and then appealed to the Ninth Circuit. The Ninth Circuit came to their conclusion just now here. April 22nd is when their conclusion was published, April 22nd, 2021. And essentially every item that was appealed by the taxpayer, by Harborside, from that tax court case was denied by the Ninth Circuit, or in other words, the Ninth Circuit sustained the tax court's position, which was sustaining the IRS's positions. So to really understand then what this means about tax law for cannabis companies, you would have to go back to the myriad of positions that were dealt with in the 2018 tax court case. And so I won't get into them here, but just kind of throw that out as a general announcement for those of you who may have been following that or wondering when it might come up. It's come to a conclusion. What, from a tax law standpoint, I'll just talk from a theoretical standpoint here for a second about how this works, because I think a lot of times, particularly in this community, they don't quite get how this works. But the decisions in the tax court case from 2018 are law. They are the only law we have in terms of some of those interpretations. I mean, we have other court cases, but they are law. Certainly the items that were appealed, the specific items that were raised on appeal that were then the tax court was sustained by the Ninth Circuit, that means they're even more powerful law, right? But any item, the kind of in between here is, well, what if there was a position or an issue that was decided by the tax court and the taxpayer, Harborside, didn't actually raise it with the Ninth Circuit? Is that law? Yes, it's law because the tax court said so, and it has not been successfully appealed. Now, could another company who has a appetite to argue with the IRS and the tax court take a position that is contrary to that tax court decision, lose in tax court again, and then appeal that position to the Ninth Circuit in hopes of having it overturned? Maybe, right? Maybe. But consider all the things that have to line up for that. So unless you've got a lot of money and lawyers and you're wanting to battle that out with the IRS, then with the tax court, and then hope that maybe when you appeal it to the Ninth Circuit, you might win, you have to assume that the position as it was decided by the tax court already is the law currently. So for all the folks who are thinking about this out there, the 2018 tax court case, that tax court decision is the law as it is right now. Now that doesn't, for those of you who don't know those laws, that doesn't mean anything, but maybe in future content, we can go through kind of all the details, all the different positions that were decided on, because there's a lot of different aspects to what Harborside was trying to claim, and that was decided against them by the tax court in that 2018 case. So stay tuned. Maybe we can do something on that in the future.
I would say, to your point, though, the likelihood of another cannabis company coming up against, the same kind of ruling and then getting struck down and trying to take it to the Ninth Circuit is probably, the professional term is slim to none, because the amount of money and time and effort it would take. I mean, looking at this one, Harborside started when this court case, and now I know the 2018 what ruling was upheld by the Ninth Circuit, but correct me if I'm wrong, I think this goes all the way back to 2012 or sometime before that, the original court case, right?
The original assessments, yeah,
Yes.
The IRS's original assessments, but then the court case was decided in 2018. Yeah, no, that's right. And I think, what I hate to see is small, most cannabis businesses are small businesses, right? It's like there's a handful that are really big businesses that would have the resources. And sure, there are some, in terms of what's the likelihood of it get battled out? Well, if there's a path, there's enough people in this industry who are passionate about these topics that are going to push what they can push through the process. So I don't know that it's that improbable that we might see another court case with some of those issues eventually get appealed. But for the vast majority of cannabis businesses, which are in fact small businesses, you're not going to do that. And until somebody else does that, this is the law. So don't be acting like the potential that somebody might do that someday, or that you think you might do that, you're not going to, because you don't have the resources to battle it out in the courts in that way. You should be considering what the decisions are in the tax court case as the law of the land, as it is for now.
And I just like to say, especially for those smaller owners, please engage somebody, and it doesn't have to be TCA, but engage a lawyer, CPA. You're wading into, don't trust your buddy that and happen to say something about, this is the way it is. And I think engaging a professional that's like steeped in this type of either law or accounting is vital for you to be on solid footing, and I think if there's one thing I'd say to that industry, it's like, please, please, please engage somebody that knows what they're doing, and has solid footing in this area, because it is so fraught with regulatory nightmares that can happen.
Yeah, I think Ty touched on it. I mean, there's not a whole. It's a conglomeration of a bunch of small businesses, and earlier a couple of weeks back, we had a show talking all about cannabis, and I think when this gets to the point where it's in all 50 states and they've got a bigger presence and they've got more wherewithal to fight these types of things, they will. But right now, they just seem to be. They can come down hard on that industry and enforce some rules. But I think as that industry gets, grows in size and becomes, employs more people and becomes a bigger part of the economy, I think they're going to have more clout and they're going to have more wherewithal to kind of fight on a level playing field. But right now, unfortunately, they almost have to just live with the terms of these decisions when they come down.
All right. That's another episode of the None of Our Businesses podcast. Join us next week for more business news and advice from many accountants' experiences. If you'd like, smash that like button, hit 5-star review on your podcast app of choice. And if you disagree with anything we said, leave us a comment. But we'll see you next week. Thanks for tuning in.
Thanks, everyone.
See ya.